In today's weekly Forex forecast, we're talking about the DXY, the euro, the pound, the dollar versus the yen, and also the yen basket of currencies. And the pound is especially interesting, so you're going to want to stay through the entire video because things are really starting to change up here for the Forex market. And I think we're going to have some really nice opportunities in the coming days. And this video is sponsored by Blueberry Markets, and for a limited time when you sign up with them, you can get a 30% deposit bonus. So even if you deposit a few $1,000s, they're going to give you a 30% deposit bonus on that. And if you deposit $1,000 or more, I will grant you lifetime access to our VIP group, including the Discord chat and also the course. So be sure to check out the link in the description below, sign up for them, and get started. All right, so let's go ahead and kick off this video, guys, talking about the DXY as we always do. And really, for the most part, no change, right? The Forex market still continues to be very sideways, very indecisive, so there's no change there just yet. However, I do think that things are getting a little bit interesting here in the sense that we have the DXY failing to move lower, okay? Now, don't get me wrong. The market is still in a downtrend. I'm not saying that this is a buy right now. And I'll have details on that when we start talking about the euro and especially the pound later on in this video. But right now, what you can see here is that we have at least the potential for this to be a higher low. Now, I've talked about this a few times recently, and so far there really hasn't been any confirmation here from the US dollar because we just have it going sideways over the past few weeks. Now, furthermore, we also have it holding below this trend line here all year, okay? So again, there is no buy here just yet, but we do have the potential at least for this to be a potential higher low from the DXY and get that push higher. And like I've said too in recent videos, guys, the one reason why I keep talking about the potential for a bullish US dollar is because of areas like this back here. And areas like this tend to serve as magnets for a price. And this is an incredibly significant gap here, okay? Fair value gap, imbalance, inefficiency, they're all essentially the same thing. They signal open liquidity in the market, okay, where you get this imbalance of buyers and sellers. So you see back here how we got this very aggressive move lower, and we saw a retrace into this, but very, very shallow, okay? So all of this up here is what I call an imbalance for the market, and that tends to serve as a magnet for a market, but only if you have a technical trigger. So to make things very simple, guys, the only way that this up here becomes our target, or my target at least, is if we see the DXY getting above this trend line here, and really also areas like 100.2. Because you can see back here, this was resistance, flipped to new support, back to resistance on this candle, on that gap up, okay? So really, in my opinion, this area back here is going to be the technical trigger for the push up here toward this area. So you might be looking at this and thinking, well, if I'm not buying down here, I've got to wait for the market to get, above this level here and 100.2, etc. But the way you have to look at this is that if, in my opinion, if we get this here, if we get the market breaking above here, right, and 100.2, that right there, guys, is probably going to push the market back here toward these highs and most likely back toward 106. So you have to think of it like this. Yes, you could miss out on the first few moves here if we get it. Again, this is a big if, because right now we don't have confirmation of this. But if we get it, yes, you could miss out on the first few moves, okay, in this area down here. But you've got to consider that if this becomes your target, highs like this and this pocket back here, right, this is well worth it, guys. There's a lot of real estate here to trade if we get that breakout. Now, the bearish scenario for the DXY, because again, this is not me saying that the market is going to move higher because we have no confirmation. The bearish scenario is, of course, the market holding below areas like this back here, 100.2. Okay, so this low back here, you've got these highs through here, you've got this trend line. If the market fails to break out from here, then we're looking at that push lower down here toward 97.7. Okay, so this low back here, we've talked about 97.7 in the past, and that would be the key support going forward. But again, looking at this chart, also the euro and the pound, guys, I do think that we have that potential for the market trying to bottom here. And the reason I say that is this. You look at the trend so far this year, and you can see lower highs and lower lows, right? Very clear. And then recently here, we have the market kind of stalling out and failing to make a new low. Now, it doesn't mean that it won't happen, but you can see where we have kind of stalled out here to the point where there is that potential, okay? So that is it. Let's move on to the EURUSD now. And if you guys are enjoying this content, be sure to smash the like button. It takes me hours to make this stuff, a few seconds to like it, and also subscribe to the channel because we do have videos coming out like this every single week. And I will also update you guys on this stuff throughout the week. So the stuff we talk about in this video, I'll have updates Monday through Friday. So looking at the EURUSD, a very similar trend line here off of the lows for the euro. And this isn't the best trend line only because if this low back here had touched off of this, I'd feel a little bit better about it. But you can see that for the most part, this is pretty well defined up here. And the thing about the euro right now is that, yes, it is still in an uptrend. So this is not me saying that it's bearish. However, the market is starting to stall out here, right? And being the inverse of the DXY, that's to be expected. But you can see where the market is just kind of carving this, lower high so far and really struggling to get off of this trend line. So it's very different from what we saw back here, right? A very aggressive move up. Since this low back here, the market has really just kind of struggled to make higher highs and higher lows. And furthermore, if you look here at the weekly, okay, and this again is still speculative because we don't have a confirmed breakdown. So this is not me saying that this market is bearish, but you can see that we have this bearish candle back here, this long upper wick. Last week filled that in, okay, came up here in the 50% area, which we typically see. And so far, again, the market's just kind of struggling to make these higher highs. So I think that we could have the potential for the euro pulling back. Now, here's what's going to be key. And this move back here recently makes it a little bit more, indecisive or confusing because typically when you get a market closing below highs like this back here, you do get that move lower. And instead, we just saw it pop right back up and test this wick up here. But the reason for this move here over the past few weeks could have been this upper wick. Okay, it could just be the market taking out this upper wick, filling the 50% like we did last week, and then rotating lower. Okay. Now, again, this is speculative because we don't have the breakdown just yet, but my gut's kind of telling me that we are getting to a point where this could start to break down. Now, for the euro to become a sell, though, or a short, you would have to see it getting below trend lines like this here, also the area around 112.75 and 112. I think if we start doing that, then it opens up these key levels down here around 110.60 and potentially 109.40. Now, if we get this, okay, and again, it's still a big if. I hope you guys are really following me on that because I don't want this to come across as this is a short right now because it's not. But if we get it, like I've talked about in recent videos, you can see this consolidation back here that ended up being the bottom for the euro. You can see this aggressive move here, very shallow retrace. So essentially below 1.07, this would all be fair game if we start to get the market breaking down. So just like I mentioned with the DXY, even if you miss those first few moves up here, there's really no FOMO here because if we start to get the market breaking some of these key levels, you've got all of this real estate down here. Okay, literally hundreds and hundreds of pips to work with if we do get that breakdown. Now, if we get the euro breaking out, okay, and taking out levels like this up here, next week and taking out 115.30, etc., then we're looking at that move potentially up here toward 116.60 and higher. Okay, so we have to weigh both scenarios right now because we don't have a confirmed breakdown. But like I said, I'm starting to get the feeling like this could start to fail just because the market is really struggling here at this trend line to get off of this trend line and also to carve that higher high. So we can still see that, but all in all, guys, it is starting to look a little bit exhausted, I'll say. I'm not going to say it's bearish because it's not, but it is starting to look a little bit exhausted here over the past few weeks. Okay, so let's talk now about the pound. And this is the one that I really want to focus on because it is very, very interesting right now. If there's one chart out there that speaks to the US dollar potentially bottoming, it is this chart. And you can see why from this chart right here that we're looking at. Okay, so you've got this trend line, first of all, off of these lows. Now, not the most well-defined trend line, but it still checks out. Okay, and you got the market tested last week on Friday. Now, this level up here, okay, off of these highs, you can see we have the potential for a rising wedge forming. Now, this looks very similar, okay, to this price action back here. So this was the 2024 top. And you can see very similar structure, right? This level up here is essentially this one. And then you get this short-term trend line off of these lows that are here right before the breakdown. So again, very similar to what we've seen here recently from the pound. So structurally, guys, it's starting to look very similar to what we saw in 2024 right before that peak, which obviously that led to a very aggressive sell-off, okay? Now, again, I'm not saying that this is going to happen. We don't know that yet. We don't know which way this market's going to go, or any market for that matter. Now, if you want a little bit more confluence here, let's take a look at the RSI, which typically, full disclosure, guys, I don't typically trade with the RSI, but I saw this happening here, and I was like, you know what? Let me take a look at the RSI and see what we're getting. So looking back here at 2024, you can see that we had these higher highs. Okay, so this one right here and this one. Now, if you look down here at the RSI, this is where it gets interesting because these highs back here were essentially equal. Okay, so there was no bearish divergence there. However, notice these two higher highs, or this one higher high up here, and you can draw a trend line off of these two peaks on the RSI, and notice how we had that bearish divergence. Okay, so this right here signals exhaustion or potential exhaustion. Of course, you do need that confirmed breakdown from a market to really confirm things. And so far, we are seeing something very similar. You can probably see it already. Over here, we had these higher highs, or equal highs. So this was not bearish divergence. However, right now, we're seeing a little bit of bearish divergence again, very similar to what we got back here. So structurally, once again, the RSI even looks very similar to what we got back here in 2024, right before the market topped out. So again, guys, I want to be very clear. I'm not saying that this is going to happen. We don't know that yet. We don't have a confirmed breakdown. But all in all, I think that if you're out there buying the pound or the euro, I think that you really are playing with fire, because these markets are starting to signal a potential reversal coming up here in the coming days and weeks. Now, let's talk about how to potentially play this if we get it. And the first one would obviously be to watch for a breakdown below this trend line here. Now, that would be a little bit speculative, because the thing with trend lines is that you can draw them a few different ways. You can draw it, with the wick down here, or you can draw it a little bit higher to include this low back here. Either one is technically valid. So the way to really confirm things here, in my opinion, is going to be if the pound closes below this level here. Okay, so horizontals always are going to be, trump diagonals when it comes to breakouts and breakdowns. So looking at this area through here, I think this is the one that if we see the pound get below here on the daily time frame, then that is really going to open up some of those lower levels, including this area down here, which is a massive imbalance for this market. And that's also very near the 50% of this rally that we've seen so far in 2025. Okay, so I do think, guys, again, we have that potential for some significant reversals out there in the market. But I think, too, if you're looking at something like this and you're waiting for the pound to break down from here or break this level, you really also need to see the DXY getting above its descending trend line and also that 100.2 mark that we talked about. So if you get all of those things happening in combination with one another, that's going to be a very high probability setup for things like the pound or even the euro. Okay. Now, alternatively, because again, we don't know, this market could just continue higher. If the market takes out, this high up here and just continues higher and bases above here for a few days, then we're looking at 137.50, 138.70, etc. Okay. So you have to weigh out both directions here, because we really don't have confirmation one way or the other just yet. All right. But I do think structurally, again, when you look at this chart pattern from 2024, compare it to what we're seeing so far this year, and also even the RSI, that bearish divergence, things look like they could be topping out here over the coming weeks. Now, let's move on to the dollar yen. And I'm going to do things a little bit differently today. Instead of just talking about the dollar yen and then another currency pair, we're looking at the dollar yen and the yen basket of currencies together. And the reason for that is because it's going to give you a great view of the Japanese yen as a whole instead of just the dollar yen. So I'm going to pull up the yen basket first. Okay, even though we're looking at the dollar yen, I want to talk about this chart first. And this is a very overlooked chart in the Forex market. It's very similar to the DXY, how the DXY is for the US dollar. This yen basket of currencies or yen index is very similar to the DXY, except obviously we're looking at the yen here. Now, this is predominantly the dollar yen, so it's essentially the inverse of the dollar yen. However, there's a lot more that goes into it. So you're going to find things here on this chart that are not going to line up with the dollar yen, and that's a good thing because you want to use this to your advantage, right, to get an edge in the market. And when we look at this chart on the weekly time frame, you can see that going back to 2020, we have an incredibly well-worn trend line here off of all of these highs. Okay, now something happened here recently where we got a breakout on the weekly. So if we move in here, now that we know this is a very well-defined trend line, let's look at the weekly here over the past couple of months. And you can see that this was still resistance back here. We got a breakout on this candle. Notice what flipped to support over the past few weeks, right there at the same trend line. Now, we also have the market breaking below this trend line off of these lows. So this low goes back here to 2024. And you can see also very well defined. You can also see where the yen basket tried to hold above it here on the weekly time frame. Now, last week was technically the first weekly close below this ascending trend line, okay? Now, in order for this to be a buy-side fake out, which is my preferred way of trading, we have to see this get below this level right here where it closed last week. It has not done that yet, so this is not confirmed just yet. But if we get a weekly close down here in this area, then it confirms this is a buy-side fake out, and it could send the yen down here toward these lows, potentially back here toward that 2024 low over the coming months. So you can see why this would be significant, right? If we know that the yen index or the yen basket of currencies is closing below levels like this on the weekly, and this is going to take time. Again, it has to occur on a weekly closing basis, because if you look at the daily, right, this is not going to line up. You look at all of these candles back here, this does not line up. This is telling you that you have to see a weekly close below here for this to become a failed breakout, okay? But again, just like the other stuff we've talked about, if you're waiting, okay, let's say that you're waiting for a week for this to break down and you get that, right? Let's look at something like the dollar yen. Look at all of this real estate up here, okay? All of these highs, guys, back here become fair game if we get that, okay? So it is worth waiting for because you've got all of these levels up here that could become targets if we do get that failed breakdown from the yen basket. But again, it's going to take time. We don't know if that's going to be the case. But just like with the DXY, what really catches my attention about this is that back here, you can see we had a fairly aggressive downtrend, okay? Lower highs, lower lows. Same thing here, lower high, okay? So no change here so far, but look what's happened recently, right? The market's kind of stalled out over here. So you can see that sellers are unable to force this market lower, at least so far, and that could be indicative of a potential bottom, okay? And furthermore, you can see where really this has just been a big range here for this market. So if you look at this here and we just draw a rectangle across these lows over here, what you can see is that this has just been one, big range for this market, right? So if you're thinking in that context and you're looking at things like the yen basket over here, and if it closes below that 2020 trend line, makes this up here a failed breakout to the point where we get the yen moving lower over the coming months, then you can see the potential on something like the dollar yen, right? Coming off of these lows down here, right? The potential is there to get that move back here towards some of these areas. And there are inefficiencies or imbalances up here as well that we could use as targets. So for the dollar yen, a couple things, guys. I want to see the yen basket close below that 2020 trend line. I also want to see this market get above levels like this. Okay, I want to see it get above here and hold above it, okay, on the high time frames. Now, that would be the start, but again, we need to see that yen basket closing below that 2020 trend line. I keep saying it, but that is going to be a key factor here to get the dollar yen bottoming and targeting some of these higher levels over the coming weeks. Okay, so, right now, guys, still indecisive. I don't want to trade this market while it is doing this, okay? And I certainly don't want to buy it as it comes into this resistance, but I do think if we see the yen basket get below this trend line here, guys, then I think that's going to set up potential yen weakness over the coming weeks and months, to the point where we can start looking at the dollar yen or the euro yen, pound yen, whatever you want to look at, and to really start looking for some yen shorts, because that could send those markets much, much higher. Of course, I like the dollar yen. If the DXY can start to break out like we talked about, then I like the dollar yen in that case. But again, there is more work to do here for this market to really set up. All right, guys, so that's it for today's video. Pay close attention to the pound this week and what happens here at this trend line and levels like 1.343. That is going to be the level to watch this week for a potential reversal. And also the DXY around this trend line here off these highs so far in 2025. So this level right now, next week comes in right around 99.50, 99.60, as well as that 100.2 level that we've talked about. All right, guys, if this video helped, be sure to subscribe to the channel, smash the like button, and don't forget to sign up with Blueberry Markets, claim your 30% deposit bonus, deposit $1,000 or more, and gain lifetime access to VIP. Have a great weekend. I will talk to you again on Monday.